Good morning, everybody. This is Ryan Moe filling in for Joe Vaklovic. It is 5:31 a.m. on Monday, March 10th, 2025. May corn right now is unchanged at 469 and a quarter. We've got May beans down 3 3/4 at 1021 and a quarter. On the wheat side, we have Chicago wheat in the May up 7 right now at 558 and a quarter. We've got Minneapolis wheat up 2 3/4 at 595 and a half, and we have May Kansas City wheat up 6 1/4 right at 571. After a heavy week of headlines, seem to be a little bit lighter over the weekend. So Mackenzie, take it away.
Alrighty, so China imposed $2.6 billion worth of tariffs on Canadian agricultural and food products over the weekend. The tariffs will begin on March 20th and include a 100% levy on $1 billion of canola oil, oil cakes, and pea imports. Additionally, a 25% levy will be imposed on $1.6 billion worth of Canadian aquatic products and pork. The move is in response to Canada's tariffs on Chinese electric vehicles, steel, and aluminum imposed back in October of 2024. China excluded canola from the tariffs, signaling a potential openness to negotiations. Some analysts see these tariffs as a warning from China, aiming to deter Canada from aligning too closely with U.S. trade policy.
Tariffs everywhere. This is just another unfortunate situation that's taking place in the current news environment. We did have some news out of China here over the weekend. We've got Mark Carney wins the Canada Liberal contest and will succeed Trudeau in days. So that is the latest and the greatest out of Canada. But as we're seeing here, it kind of feels like this trade war with China is as much of a North America thing as it is just a US thing. And so we have to go ahead and continue to watch as this develops. I'm sure that there's going to be some additional changes if this week's news cycle is anything like last week's news cycle. Possibly by the time you see this video, we will have either a resolution or an increase in those tariffs. But it looks like the US is not alone in wanting to go ahead and have a trade war with China.
On to some news about President Trump. During a Fox News interview on Sunday, Trump declined to rule out the possibility of a recession or higher inflation. He acknowledged that his newly imposed tariffs could lead to a transition period, but emphasized their long term benefits. He specifically mentioned the benefits of tariffs for U.S. ag, but did not provide details. Trump reiterated his vision of the U.S. as a dynamic economy driven by private business instead of the government. He also stressed that his policies focus on long-term economic growth rather than short-term market fluctuations. Also on Sunday, Commerce Secretary Howard Lutnick dismissed recession concerns and instead predicted strong U.S. economic growth over the next couple of years.
Well, I mean, nobody is perfect at predicting the future. And I think everybody has proven that here very recently. When it comes to a lot of these headlines and a lot of these news stories, what I've discovered when it comes to President Trump is that you actually have to look at it directly from the source. And this one was a Maria Bartiromo interview with President Trump over the weekend. It's about 12 minutes long, and I would encourage people to read it directly and listen to it directly, because one of the problems that we have with the current news cycle is that one sentence gets interpreted 350 different ways. And we end up in that spin cycle of trying to determine which of those 350 ways is the right way to look at things. For myself as a capitalist, seeing there as being an emphasis on private industry as opposed to government spending, that was a highlight for me. But as we continue to, watch this news cycle and try to keep up with it, I'd encourage everybody to go to the source as directly as they can. It's a 12-minute video. It's not the end of the world to take it in, but it is also something that you actually hear stuff directly from the president or people that are directly in the president's sphere, as opposed to what some news outlet is interpreting what they're saying.
The funds slashed their net long position in the corn market last week. CFTC released weekly commitment of traders data on Friday. During the week ending Tuesday, March 4th, large money managers were net sellers of 127,000 corn contracts, the largest weekly sell off since February 2023. The funds were also net sellers of 48,000 soybean contracts and 18,000 contracts of SRW wheat on the week.
Yeah, we knew it was going to be a bloodbath, especially in the corn market there. It was just about as bad as everybody had expected. The estimators estimated they were off by about 25,000 in the corn market and about 4,000 in the bean market. That's not that bad considering the amount of volatility that we had. However, I do want to always breathe caution into people when looking at what the fund estimated selling is, because back in the day when we had pits, there were some senior people in the pits that could tell who was selling what and where that trade flow was coming from. Since the pits closed here several years ago, a lot of these fund estimates have not been that great. And so, therefore, when we get these reports on Friday, there gets to be some pretty wide variances. This week, it wasn't too bad, but it was a pretty significant sell off nonetheless. When we watch what they've done since then, it looks like they've bounced back by several thousand contracts. Some are assuming as many as like 30 to 50,000 in corn. But these issues with the as of Tuesday reports that come out on Friday, I have a pretty significant issue with that. And I also have a pretty significant issue with daylight savings time. But I'm discovering that nobody's calling me and asking me what my opinions on those things actually are, and whether or not we're going to change them.
The DOJ has launched an investigation into the surge in egg prices. The department's civil antitrust team is investigating whether major producers colluded to inflate prices or restrict supply to boost profits. Egg prices have risen more than 50% compared to last year, with consumers now paying about $5 per dozen on average. The egg industry attributes the sharp rise in prices to the recent bird flu outbreak, which has been the worst in U.S. history. Since 2022, over 150 million chickens, turkeys, and egg laying hens in the U.S. have been destroyed in an effort to contain the virus's spread. The USDA recently announced it will be allocating $1 billion to combat the bird flu outbreak and stabilize egg prices.
Yeah, they probably have to do something like this just for political posturing. When you look at the egg industry, we have to really have some compassion for what those folks are going through. Would we love to see a lot more small players in the egg industry? I'm sure a lot of people would like to see that, and they'd like to go ahead and see a distribution of production on a wider and smaller scale, but that's just not the way that modern agriculture works. Due to the efficiencies and the world's need for cheap food, we have to have these consolidations, and these consolidations are kind of forced to happen considering the retail environment. But saying that the producers are colluding to hike up the price of eggs, that's a little bit of a reach. And I'm sure there's going to be some people that are paraded in front of Congress or something like that to have a discussion around this. Do I think there's any substance in it? No. Do we need to recognize that this bird flu is something that's very serious and it's a very huge challenge for American agriculture? Absolutely. And so to have this go ahead and be, unnecessary weight being thrown onto an already overburdened egg industry, I think we got to just kind of let these people solve the problem of bird flu first, and then we can go ahead and talk about all this other stuff later.
U.S. job growth fell short of expectations last month. The U.S. economy added 151,000 jobs in February, an increase from the downwardly revised 125,000 in January, but the number fell short of the projected 170,000. The unemployment rate climbed slightly to 4.1% compared to 4% in February. Average hourly wages increased 0.3% as expected. However, the annual increase of 4% was slightly lower than the expected 4.2%. The number of people working part-time for economic reasons rose to 4.9 million, the highest level since October 2021. The Department of Government Efficiency's effort to cut the federal workforce eliminated 5,000 jobs in January, the first decline in federal employment since June 2022.
Yeah, I mean, not a lot of waves on this one. I think some people were wondering if the Doge department was going to have a more significant impact on some of this, but again, this is stuff from back from January, so it hasn't really taken effect yet. We do need to look more at the revision. And so the revision being revised downward is a little bit more significant to me. When we look at the headline number is what the headline number is, but this is the part of the article I think requires a little bit more attention. Non-farm payrolls increased by a seasonally adjusted 151,000 on the month, better than the downwardly revised 125,000 in January. Right, so that downward revision is what a lot of economists want to watch and want to look at because those are data collection mechanisms, and those are data collection strategies that sometimes take a little bit of time to put together. And so when they revise things downward, that is a little bit more of a negative signal to me than the headline number of 151,000.
Cattle futures rebounded on Friday. Live cattle were $1.55 to $4 higher. Feeders saw gains ranging from $2.95 to $4.35. Cash cattle trade was steady to higher last week. In the Southern Plains, we saw cattle trade at $1.97. That was steady with the prior week. And then up here in the North, cattle were $2 to $4 higher at $2 to $2.02.
Crude oil futures are just unchanged here, up only a nickel. It's 67.09 here in the May. We've got the US dollar seeing a little bit of weakness and quite a bit lower after just a really, really tough week for the buck last week. That right now is down 21 and a half points at 103.6240.
Everyone, have a great day, and we will catch you guys tomorrow.
Thanks much.